Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is all about helping us grow our money. You see, we go to work, we take our time, we go to work, we get a paycheck in order to eat. And that's not a bad thing. It is good to work. But imagine a life where money could make you money so that you could work a little less, have more time for the things that matter most to you, whether it's spending it with family, friends, engaging in a purpose greater than yourself. That is what Everyday Investor TV show is all about. Remember, whenever you're faced with any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what's the ROI? What's the return on investment? Number 2, when do I get that return along with the money that I put in? If someone says, it's 5%, but it's over, 5 years, then that might not be the best, investment opportunity. So you always want to ask, when do I get this return along with the money that you put in? The third question you want to ask what is the minimum investment amount that's needed? And 4, you look them right into their pretty eyes and you ask them, what's the downside? What is the risk? If they can't tell you, run really fast. So glad that you're on the show with us. Super excited about our guest. We're going to be talking to our friend. Wait for it. We'll be right back. Coming up, we talk to Dave Knight, and he's going to teach us how we can make money investing in the flip.
To be honest, it came down to the fact of, am I going to be grinding out all this overtime over and over and over again? And is there a better way that I can invest my time? And slowly but surely just got exposed to real estate, went to a couple seminars and started getting educated, and then finally started taking a little bit of action. And
the mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. Before we talk to Dave and learn how we can make money with flipping homes, let's find out what's happening in the world of stocks with stock expert Omar Khan. Over to you, Omar.
Thanks, Rav. Omar Khan here, guys, with Data Trading Weekly Market Update. Markets keep pushing higher. We're not quite back to our all-time highs. We talked about this in the past. October can be a bit of a wonky month. We're seeing that, but corporate earnings, the amount of money companies are making is coming in pretty good. We saw that with Tesla, we saw it with Facebook, and the stock market's almost back to an all-time high as a result. Now, Tesla, we talked about this company in the past. Wow, what a move by this company. This company keeps pushing higher stock price-wise. And we can see this every day. You look out, on the roads, you see more and more Teslas on the road every day. So this is now coming into fruition in terms of the stock price. And it's an interesting thing to see going forward, but markets are doing well. We're going to see how the rest of corporate earnings come out and hopefully get that Santa Claus rally where the markets perform well during the end of the year like they do historically. Anyways, back to you, Rob. We'll talk soon.
Thanks, Omar. Always great to hear from you. Dave, how are you, my friend?
I'm good, man. Thanks for having me on.
Yeah, we were supposed to do this a long time ago. Here we are in the fall of 2021. I think we're supposed to do this pre-COVID together. But hey, better late than never. Super excited to have you on. What people don't know about you is you are you have a full-time job, outside of real estate investing. But talk to us about that and what you're doing. And before you do that, I just want to say thank you. Thank you for your service. But why don't you let the viewers know what you're doing outside of investing?
Yeah, well, first off, thanks for having me on, man. It's an honor to be on here. So I'm a full-time police officer here in Ontario, and been on the road for about 10 years now. And just kind of during that time, I've got interested in real estate and seeing what other people were doing around me. And to be honest, it came down to the fact of, am I going to be grinding out all this overtime over and over and over again? And is there a better way that I can invest my time? And slowly but surely just got exposed to real estate, went to a couple seminars and started getting educated, and then finally started taking a little bit of action. And it evolved in a few things that we can talk about for sure. But yeah, so just flourished into my podcast, which is trying to share the information. And just like anyone else, I'm growing and learning as we go, man.
No, that's fantastic. I love it. And you're also helping, your colleagues, first responders. I mean, that's the purpose of your podcast, is to be able to inspire others to do the same. You don't necessarily have to give up your day job, especially if you love doing what you do. But it's great to always be investing in real estate. Is that kind of the thinking?
Yeah, 100%. To be honest, I just found that no one was really talking to our community. So I thought it was a great opportunity to not only learn for myself, to interview all these amazing people who are doing things way ahead of what I'm doing, and then at the same time just share that with my own community and again just share the information. So I mean, it's crazy. We've been doing it for about 3 years now, and I don't pay for ads or anything like that. It's just strictly word of mouth, and it's been a great run. And met a lot of great people too. It's been a relationship builder for sure.
No, that's great. Talk a little bit about the importance of, financial education to you. I know we have a mutual friend, Ray Ostrander, and I know that you were doing some coaching there, and then invested. I mean, you just exited a big deal in the States, and talk a little bit about the importance of your podcast, shows like The Everyday Investor, taking courses. Obviously from the right people, but talk about the importance of being educated, because I really believe that knowledge mitigates risk. I mean, there's I know you're a big believer in not letting fear stop you, but talk to the audience a little bit about that.
Yeah, so to start off, yeah, we definitely do have a mutual friend there, and he helped me kind of get started. Actually, I first met Ray when he was doing Keyspire, and that was my first real exposure to like a boot camp style 3-day education session, and it just blew me away. I had no idea at that point. I had a student rental, and I thought I was chasing cash flow, but I had no idea how to analyze deals. Everything from large to small, and just how the foundation of real estate investing works. So the importance of just getting educated and understanding what can happen if you just put a little bit of time and effort into your education, investing in yourself versus just relying on a paycheck or one pension, and understanding if you want more, that's okay. Because in our field, Rav, I find, money doesn't get talked about. Investing doesn't get talked about. All we think about is grinding out overtime, maybe climbing rank, and then that pot of gold at the end of a 25, 30 year or 20 year, depending if you're in the US, pension. But you can't pass that down. So, if you start looking at legacy and having an impact and wanting to do more, whether it be, traveling, paying for your kids' education, or just experiencing more and doing more and just experiencing more, like I said, that's what real estate's done for me. So that's really why I really dove into it. And part of that was education, like I said, going to meetup groups, seminars. I know you're a part of a good one too, and Sarah's there as well. Some great people. So surrounding yourself with people who are already doing what it is you want to do, paying for mentorship, paying for education, and literally investing in yourself versus just exchanging that time for dollars, but learning that you can grow a skill and actually start getting your dollars working for you.
It was something you said very interesting, and I think that's why we need to be educated, because a lot of people think, maybe I'll just buy a property, rent it out, and that's it. And then, go a little more advanced, student rentals, for example. And you said you were chasing cash flow, didn't know that there was other things. So for somebody like you may not need cash flow. You may want to grow your capital and keep putting it in and rolling it over. We're going to talk about one of your deals that you just did, flipping a house. But then, producer of the show, you mentioned Sarah Larby, she wants cash flow because she was able to retire before 40, and she wants the cash flow to be able to eat. So, you have to also find out what is the why for you. Am I going to give up my day job? Do I want real estate to replace it? Or do I just want to grow my capital? Do I want it passively? Do I want it actively? So I really appreciate you saying that. There's a lot more to investing than buying a property and renting it out. You have to know what is good for you. What's good for Rav might not be good for Dave, or might not be good for Ray, or might not be good for Sarah, but we're all investors. So I really appreciate you saying that.
Yeah, you kind of hit it on the head, where the one thing I never even asked myself was the question is like, why am I doing this? And there's nothing wrong with just, you are already light years ahead of majority or 99% of the world if you just buy one rental property and hold on to it. There's nothing wrong with putting 20% down turnkey and holding that property, but then you get to a certain level of exposure and maybe skill and desire that you start doing those more creative strategies and whatnot. But like you said, it depends on what you want and where you're at. Like, for example, my parents, who've actually invested in a couple of my deals passively, they have no desire to start growing a portfolio, or people who are just getting ready to retire, or later on in their life, they've accumulated some wealth wherever, just in their home or whatever, but they have no desire to go and do any active stuff where there's that passive stuff. And that sort of exposure just wasn't even, in my realm. So it depends on what you want, figure out what you want. And then for me, I decided to go down the path of more active and trying to get as, learn and grow as best I can. And kind of that's where I'm at.
And so how do you do that? You're not a fireman. Firemen, they work a week,
well,
and then they get off, they take off a year, it seems like. But to be a police officer, you're busy, and you say you're an active or real, investor. We're going to talk about a flip here in a few seconds that you just did. But how do you do it? Is it evenings, weekends, or like how does Dave manage his time?
Well, Rav, I'm glad you brought that up, because if I was a firefighter, I'd probably have twice as many properties on the go right now. But I'm just teasing. No, honestly, it comes down to being able to have a team around you and learning what it takes to, do projects, or not have to be doing everything yourself. Because that's kind of what I was doing at the beginning. I had a few properties and I was managing it myself, and any type of small problem, I'd be running over and doing it. But being able to have a team around you can leverage and learn off of, and not having to devote all this time, that's how I do it. So I'm working shift work. Yeah, I'm working shift work. So having that ability to pick up the phone and get someone else to do something versus you having to do it is everything.
No, that's how you have to figure out what you're worth an hour when it comes to the real estate game. And there's lots of people that would love to do $30, $40, $50 an hour type of work. And if you can leverage it out to them, and no, that's very, very, very smart. Okay, so we're going to talk about a flip. Tell me a little bit about it, and then we'll take a break, and then we'll go through the numbers. So talk to me about it. Where is this property? Were you originally going to hold it and then just decided that, hey, the market's too good, or did you already go into it knowing that you were going to cash out? What was the thinking there?
So this specific property we'll talk about, actually I just closed on today as we're having this interview, so it's kind of an exciting win for me.
Congrats.
But thanks, man. So I went in with the game plan of a flip, but I like to have two exit strategies, whether I can burr something, so refinance at the end of it and hold on to it, or flip it. But flipping was my strategy, but it's the conversion turnkey flip is what we'll talk about.
Okay, and you mentioned burr. I don't know if you're cold or if that's a strategy.
Yeah, exactly. So just you're buying, you're renovating, you're renting it, and you're refinancing, and sometimes people throw that last dollar repeat. So it was the ability to hold on to it, exit out, pay back the investors, because I used other people's money for this specific deal. And because the market honestly was going so crazy, the return is so high that I want to take those dollars, pivot it, and put it into something I can get a higher yield on.
No, I love it. You know what? There's a lot of people out there. They for example, they have their principal residence, then they're moving, and then they decide to rent out their principal residence. And they ask me for advice, and I say, well, if you just came into this city, that home that you're thinking about renting out, would you buy that as an investment property? And they say, no, not necessarily. And then I'm saying, then why aren't you selling? And I love what you just said there. It's kind of like a game of Monopoly. We don't just, buy something and keep it. If there's something better, if there's a better use with our money, then we sell, we pivot, and we do things that are for a better use. So I appreciate you saying sometimes we can kind of just get stuck in saying, I'm buying this property and I'm never letting it go. That's not necessarily the wisest thing. Thoughts?
Yeah, no, exactly. And again, it comes back to our original conversation of what is your purpose? There's you can never argue against buy and hold. I mean, you're always going to win long term. It's just that for my specific situation, I want to exit policing at a certain point where I don't want to be working a full 30-year career. So for my specific, my why, what it is I'm doing, I'm trying to exit and pivot rather than the long-term hold. So that's the only reason why I decided to do this route.
I love it. Let's take a quick break, and we come back. We'll go through the numbers. We're talking to our friend Dave Knight. He is a real estate investor. He's also a police officer, first responder. Don't go anywhere. We'll be back right after the break.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back to Everyday Investor. We're talking to our friend Dave Knight. He's teaching us how to make money in the flip. Before we do that, let's find out what's happening in the world of mortgages with mortgage expert Kyle Ford. Over to you, Kyle.
Thanks, Rav. My name is Kyle from the Kyle Ford Mortgage team. I'm excited to chat with you guys about some upcoming private lending opportunities. Did you know that you have the ability to participate in private lending opportunities secured on real estate starting at 10%? Yes, 10% that you can lend your money secured on real estate right here in Ontario. In the next upcoming weeks and months, we have several opportunities, including first mortgages secured on quality investment properties right here in southwestern Ontario. Even better than that, not only can you lend cash, many of these opportunities are RRSP or TFSA eligible. That's right, 10% secured on real estate in your TFSA or RRSP. If you have any questions on this stuff, don't hesitate to reach out to myself and the Kyle Ford Mortgage team. Thanks. Back to you, Rav.
Thanks, Kyle. Always great to learn from you. Dave, let's dissect a deal here that you just are closing on, and very, very exciting. So where is this property? Where's this flip?
So this one specific is in Hamilton. So just near Gage Park area, if you're familiar with the Hamilton area.
Hamilton, yeah, I am. And you bought this property for how much?
So back in September 2020, so last year, purchased for $530,000.
Okay.
And it was a single family home with a detached garage.
So $530,000. Now, you said that you borrowed the money for the down payment. What percent we have to use for this? 20%?
Yeah, so we used 20% down on this one.
Okay, so that's what?
$106,000 for the down payment.
$106K.
Yeah,
and then was there some closing costs?
Yeah, we got closing costs. So obviously land transfer, lawyer fees, that sort of thing. That was $10,000 in total.
$10,000. Okay.
Yep.
$10K, and then
we had
was this some lipstick or did you do a major reno here?
No. So this is quite a large renovation, top to bottom. Still using as much as we can of the house, but we had to go change the zoning. We had to go to the city, do up our drawings a little bit back and forth, and so it was about $270,000 in renovations.
So renos, 270. Mm-hmm. Okay, and then what else? Expenses when you to exit, carrying, all that kind of stuff.
Yeah, so there was a few other things here. I don't know what order you want to go in, but so there was some carrying costs and all that stuff. So that was, why don't we start with the sale price and then we can kind of work our way down. Does that work? Or do you want to start off with?
Yeah, I want to give that the drum roll at the end.
Oh, okay,
so
okay,
I just want to know all your expenses right now.
Sure. Borrowing cost, $75,000. So we had borrowing costs, holding costs.
I'm just gonna put other.
Sure.
So 75K, that was okay, great. What else? Was there commissions you paid out?
Sure. Yep. There was about 40,000 in commission.
Okay. Is that it?
That's pretty much it.
All right. So we have our down payment, our closing, our renos, to carry it, fees. Do you have that all added up there, or do you want me to do it?
No, I got it here. So we're about 461,000 all in.
Okay. 461 is what you're in for. So
Correct.
You bought this for 530, and so what was the sale price?
So again, it was one of those things where do I burr it or do I sell it? And I was able to sell it for a little bit more than I could actually refinance it for. So this is kind of part of the strategy, is showing people that, you know, it's worth an X amount long term. So they actually have to put a little bit more down than they would actually be able to get financing for. So we ended up selling it for 1.175.
Wow.
So 1,175,000.
So the sale price, 1,175,000.
Correct.
Okay, so you are into this property. So what was your profit on that?
So obviously minus the original mortgage, the profit on that was $250,000.
$250,000.
After all expenses paid. Yep.
Yeah. So you made that and you're closing now. So you made that in about a year?
Yeah, it was just over 12 months. So I call it 12 months, but 12 months and 2 weeks.
Listen, we live in a great country. We got to pay taxes. But other than taxes, you know, to the government, you're saying you netted $250,000 in 1 year.
Correct. Yeah.
Wow. And talk to me about the joint venture relationship, the partnership that, you know, gave you this. Was this 461 somebody else, or did you put some money into this as well?
So I borrowed all the money for this deal. So none of my own money. So it was OPM. However, I did sign on the mortgage. So I had to qualify for the mortgage. Right now, obviously I'm tapped out, so I'm using more private lending for other projects. But this specific one, I was able to get the interest rate low, and I used conventional bank.
And so then what did you do a 50-50 split? Is that how it worked? Like you had a money partner and you were the working partner?
No, I'm not a fan of JVs, only for that reason, for flipping anyway, because I don't want to lose half the profits. So I give an interest to my investors, whether it be 8 to 12%, depending on where you are in the scheme of things. And so it was all private money lent out, and that was part of the 75,000 that you have there.
Okay, so for those of you that are watching and you're wondering who would borrow, who's crazy enough to borrow money at 10, 11, 12%? Dave Knight is crazy enough to borrow money from you at 10, 11, 12% because he doesn't mind making $250,000 in a year. I'm assuming those fees that you borrow the money from, that's worked out in these numbers, yeah?
Correct, yes.
So this is net. Other than paying, the government, taxes, yeah. This is your net in 1 year.
Correct. And I do everything under my corp. So, I mean, I'm not paying, personal tax on that. So everything stays under the corp. I live off my salary and I just kind of grow the pot on the side. So eventually I can, keep investing and keeping it under that umbrella. So
Dave, how did you know that if I buy a property, I mean, what did you do? So with that 270,000, I bought it for 530,000. And I put in 270. What did you do with that 270? And how did you know it was going to spit you out something as lucrative as that?
Well, I mean, complete disclaimer, the market's gone insane in the last year and a half, okay? So my last couple return on investments were about 35 and 43%, but this one netted a little higher, and we'll dive into that. But basically, it's the ability to go in and increase the income of the property. So it's single family flips versus multifamily, there's a little bit of a distinction there where you can only do comparables on single family homes. But if you have higher income, then you can kind of compare to other larger income properties. So, you know, that price there blows any other price point on my street. So you got to look beyond that in the scope of other multifamilies in the area, which gives it that price.
So you bought a single family home and you turned it into a double, a triplex, a quad? What did you do?
It was a 3-unit, yeah.
So you took a single family home and now you turned it into 3 rents for the 1 furnace type thing. That's what you did.
Exactly, yeah.
And so then you sold this to an investor?
Correct. So an investor came in and was willing to put down 20%. And even with all those numbers, it's, you know, we do above average renos and it looks really, really nice. Plus there's a nice garage on the back. So the rents are pretty high. He'd still be, even conservatively speaking, he'll still cash flow about $800 to $1,000 a month.
And it'll go up in value and somebody's paying down his mortgage. So he'll make, he'll make 25, 30% annualized return. You decided to get out, take your 250 and put it into something else, I'm assuming?
Yeah, exactly. So now I'm pivoting, like I talked about, keep the tax low, about 15%, and then reinvest under that umbrella and looking at other opportunities, specifically down the U.S.
So Dave, even though you have this 250, when you do another deal like this, will you use your own money now that you have the capital here? I mean, I'm sure you have much more than this. Or do you love to borrow at 10, 11, 12%? And have this for other things that might come up that you need to close on quickly? What's the thinking?
You know what? Depends on the opportunity. I mean, you can't. I want to scale, so I mean, I can't only borrow my own money or use my own money because I'll tap out at some point. So, you know, it's obviously a higher return. I mean, it's infinite. It's essentially because I didn't put any of my own money in, so you can't even really compare it. But I'm looking to just put my own dollars in stuff that I resonate more with, that I want to hold in long term, and then I'll use private capital for these type of flips.
Got it. So you want to use your own. If you're going to hold something long term, you might as well own it. It's, you know, it's not that it's messy, not that this was messy, but it's just cleaner that you're the only one on title for your long term gigs. But to get somebody's money out in a 1-year term, 2-year term, you don't mind borrowing, and then you'll give them their monies.
Yeah, and honestly, Rad, this is kind of part of the, you know, you're learning as you go. So I'll always figure out different strategies and different angles to go, and you pivot and you learn. So as of right now, I don't plan on using my own money for these type of flips. I plan on using my investments elsewhere. And
is this kind of like, I know, like you just exited a where you were putting money into the deal, a very large, I don't know, 100 units, 200 units in the States. You just closed on that, and now you did something like this. You have other properties. What's kind of your niche? Do you like 1 or 2 things, or will you invest in anything as long as the numbers make sense? Like what does Dave like?
I find the biggest bang for my buck right now is doing these multifamily conversion flips because, I mean, as awesome as some people I know, they're going in quick in and out cosmetic stuff, and that would definitely be more of a safer route. Like these are longer projects, a lot can happen in the market, that sort of thing. But you know, the amount of return and the equity that you can really bump this up is what I like. And then also the plan B exit of if the market does soften, I do like the ability that you can refinance and hold a property as long as you got your numbers dialed in. That's right. Yeah, you have options, and I think it's very smart that you said going into any deal you like to have a couple of exit strategies from the get-go rather than just kind of going in and hoping for the best. No, very, very, very smart. If I were to ask you what's, you know, the number 1 or 2 things, we're going to wrap up here in less than a minute, but 1 or 2 things that you would love to share with the viewers when it comes to investing in real estate. Well, just don't rely on one thing. So I always talk to my own community of first responders. So don't rely on one paycheck, one pension. There's a lot of things changing in the world, as we all see, but just commit to yourself that you want more. I always say figure out what you want and why, and then invest in your education and mentorship. I mean, I wouldn't be able to do this deal if I didn't invest in myself and actually pay some dollars to get myself to this point. And then execute what you learn and don't be so fearful and just go out and do it. So, oh, love it. Dave, thank you so much for being on the show. Really appreciate it. Thanks, man. I really appreciate it. Thank you. Thank you guys for watching. Without you, we would not have a show. We'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.